Today's highlights. Bitcoin wants to rise, but on-chain signals are pouring cold water on it. The Ethereum Foundation is still quietly selling off spot holdings. A former British Prime Minister personally claimed Bitcoin is a scam, only to be immediately proven wrong. There's plenty of gossip today. It's Monday, March 16th. No matter how the wind blows or what's trending, we must understand exactly what's happened in the crypto world over the last 24 hours. Lately, Bitcoin seems to be struggling against macro pressures. Oil prices are rising, and the Fed's rate cut expectations haven't changed, yet Bitcoin briefly rebounded to nearly $72,000. On-chain data is giving us a signal. Coinbase Premium Index has fallen back above 0.028, suggesting US institutional funds might be quietly buying during the dip, absorbing the market's selling pressure. However, the selling hasn't vanished. The SOPR for long-term holders is only 0.9, meaning some are selling at a loss. 16,000 bitcoins flow into exchanges daily. Regarding valuation, the Puel multiple is only 0.63, which is historically on the lower side. If ETF inflows continue, the market will likely remain in a state of ongoing volatility. But if macro liquidity tightens further, Bitcoin could very well test the $65,000 or even $60,000 psychological levels. Looking at on-chain data again, a very subtle signal has emerged. Mid-sized whales are starting to slow down. Addresses holding 100 to 1,000 Bitcoins, which we usually call dolphin addresses. During the bull market expansion phase of 2025, they bought up to 900,000 Bitcoins in a year, but this accumulation rate slowed down significantly, dropping to about 440,000. It recently ticked back up to 550,000. This group is unique. They aren't retail investors, nor are they like the mega whales who just sit tight long term. Their trading is more flexible, so they're often seen as a bellwether for the mid to long-term market. Historically, at the start of every bull market, this indicator shows consistent accumulation, but as the market enters its later stages and uncertainty grows, the pace of accumulation slows down. Current data reflects exactly this state. Dolphins are still buying, but clearly not as aggressively as before. However, during the recent price correction, they've been quietly picking up chips, which feels more like a wait-and-see while positioning rhythm. Simply put, the market is still accumulating, but the speed is no longer as frantic as it was at the start of the bull run. Alright, let's look at Ethereum. In this morning's member-exclusive weekly review, we identified the best bottom-fishing entry for Ethereum, right? Lately, Ethereum seems to be driven by the futures market. Data shows that Binance's Ethereum open interest has decreased by about 400,000 ETH since January. That's a scale of about $4 billion, yet derivatives trading volume remains very active. Crucially, the ratio of Binance spot to futures trading volume has dropped to its lowest since 2023. Ethereum's futures volume is now over 6 times its spot volume. What does this mean? The market is primarily being driven by leveraged funds, rather than massive spot buying. Combined with an unfriendly macro environment, rising oil prices and high inflation, market expectations for rate cuts are falling. A stronger dollar and rising treasury yields are also suppressing the rally in risk assets. In this environment, many investors prefer to use futures for hedging or short-term trading rather than buying spot directly. Coupled with the Ethereum ecosystem, some recent sell-off news, or the foundation's fund adjustments, market sentiment will become more fragile and cautious. To sum it up in one sentence, the current Ethereum market is more like leveraged funds dominating the market, rather than being driven by fundamentals. Okay, after reviewing the data, let's look at the news. Today's news focuses on Ethereum. The Ethereum Foundation has started selling coins again, selling 5,000 Ethereum today. But the foundation is very smart. It didn't sell directly on the secondary market. That would suppress Ethereum's price, right? It would bring selling pressure. Instead, they sold directly to a firm Ethereum holder, BitMine. The good news is that at this price, this Ethereum is still circulating among Ethereum supporters. The bad news is the Ethereum Foundation is selling again.
Recently, the Ethereum Foundation confirmed on X that it sold 5,000 ETH to BitMine via OTC at an average price of $2,042.96, totaling about $10.2 million with no discount. Funds are used for R&D, ecosystem, and community grants. The Foundation's treasury policy limits annual spending to 15% and maintains a 2.5-year operating buffer. This sale comes less than a month after the staking of 70,000 ETH on February 24th.
But I think that that's too low. I think Ethereum is really the story for the next 15 years around crypto, because that's where Wall Street's going to build, and that's where AI is going to take place, and also where creators like Mr. Beast are going to be building products.
BitMine is the world's largest listed ETH holding company with about 4.53 million ETH. a market value of over $9.4 billion and 195 BTC, and over $1 billion in cash. Last week, it bought another 61,000 ETH for $131 million and invested $200 million in Mr. Beast's parent company, Beast Industries, for a 7% stake. Tom Lee stated at the Consensus Conference in Hong Kong that if Bitcoin reaches $250,000, ETH would be around $12,000. If historical ratios are restored, the target is about $22,000.
The Ethereum Foundation's intention to sell its own tokens is no longer news. They sell frequently, right? And every time they sell, it's at a high point. The Ethereum Foundation really has perfect timing. But don't worry too much. In the short term, there's no market crashing effect on Ethereum's price. But the deeper long-term impact is that these tokens will be locked up by institutions that firmly hold Ethereum. Then the circulating supply will shrink. Tom Lee is a die-hard Ethereum bull. What is he betting on? He's betting that Wall Street will run on Ethereum in the future and AI will operate on Ethereum. So every month he uses real money to back up his judgment. In fact, Tom Lee stated on March 9th that the crypto winter would soon be over. On the 14th, he took over 5,000 Ethereum. We shouldn't just listen to what he says, but watch what he does. So his real money buying supports the views he holds now. Former British Prime Minister Boris Johnson, that old man with the messy white hair, is quite respectable. In my mind, he's a very approachable image of a modern leader. But recently he said something in his newspaper column, writing in black and white, Bitcoin is a Ponzi scheme. And the reason? It's a story about an elderly British man being scammed. So you see, this logic is just so flawed. If someone uses a phone to commit fraud, does that mean the phone company itself is guilty? Scammers using Bitcoin for transfers has nothing to do with the design of the Bitcoin protocol. They're two completely different things. So Johnson conflated them, and the counterattack was swift and precise. The speed of this rebuttal itself speaks volumes. While traditional political veterans are still using this logic to attack Bitcoin, the crypto world has already prepared over 1,000 answers for him.
Former British Prime Minister Boris Johnson recently claimed in a column that Bitcoin is a giant Ponzi scheme, citing an Oxfordshire retiree who invested £500, about $660, and lost about £20,000 in 3.5 years. That's roughly $26,400. Johnson stated Bitcoin is just numbers in a computer, less valuable than gold or Pokemon, and questioned why anyone should trust the anonymous Satoshi Nakamoto.
For the past 5 years, and so all things considered, if you're buying Bitcoin, you're buying the world's dominant digital monetary network growing 50% a year, and the alternative would be to hold something growing 5% a year.
Michael Saylor stated on X that a Ponzi scheme requires a central operator and promises of returns. Bitcoin has no issuer or guaranteed returns. It's driven solely by code and market demand. Eric Trump responded, "Totally disagree." Community Notes pointed out that Bitcoin's price is determined by the free market. The code is open source and one can exit at any time. At the time of the event, Bitcoin was around $71,300. It rose about 0.5% that day.
There are many other counterattacks from social media and big names, so I won't list them all here. On the day Johnson's article was published, Bitcoin's price didn't budge at all. A real Ponzi scheme couldn't withstand such public scrutiny, yet Bitcoin has been questioned for a full 16 years. As you know, our channel has been broadcasting news for 6 years now. Whenever friends from the traditional world ask me, Michael, what are you doing? I jokingly tell them, I'm in illegal finance, or I'm in the gray market. They get happy thinking, well, you're not doing as well as I am. Then they feel relieved. You see, entering the crypto world, you'll find the barrier to entry is very, very low. But one thing has a very high barrier, the cognitive threshold. Remember what an outsider friend told me a few days ago. He said, as long as your industry avoids taxes, it's a gray market. As long as your money isn't taxed, it's black money. Please remember that. An internet-famous monkey has officially joined an exchange as a brand ambassador. Is this saving money or just a publicity stunt? A DeFi player entered with $50 million, but ended up with only $36,000. The system popped up a warning, but the user still clicked confirm. Who's to blame for this? In 2026, is cryptocurrency still the most eye-catching and capital-attracting battlefield? Not necessarily, right? AI is so hot, we even released an AI morning report at 8 a.m., letting Mike use an AI perspective to interpret AI news, setting aside all human emotions, values, or its traditional value logic. So how does AI see the world? 8 a.m., meeting you every morning. So how to catch eyes in the crypto world? How to get free coverage from our channel? Bank recently did something very interesting. It took a crazy monkey with millions of followers and over 3 billion views, Ponky, and signed him as a strategic brand partner. At least this move makes us feel that Bank is going to upgrade its meme IP or its brand culture narrative.
Recently, Bank announced a strategic partnership with the meme IP Ponke. Ponke serves as a brand partner, and his image will be fully integrated into the platform's content and visuals. Ponke has over 1 million followers and 3 billion views, and has collaborated with OpenSea and MoonPay. And in 2025, he collaborated with the trendy brand Rip and Dip. This time, Bank has obtained deep usage rights for the IP. Ponke is responsible for animation and social media content creation.
I think the biggest thing by far is community, and it's belief. It's people DCAing, it's people showing up, especially real people.
Bank and Ponke simultaneously launched a 40,000 USDT prize pool event, including a 20 USDT registration voucher and a 10 USDT futures referral reward, a 20 USDT BTC voucher for a 100 USDT trade, and a 10,000 USDT trading leaderboard reward. Additionally, there's a meme creation contest and a survey, each with 5,000 USDT. Bank Community Angel Officer Eric, he calls Ponke a catalyst for crypto culture. Over 50,000 users have already participated in the event.
This isn't an advertisement. Bank is actually very stingy when it comes to brand investment. But this time, they managed to bring in this monkey. We don't know how much it cost. But they succeeded in creating eye-catching content. At least we gave them a free promotion. But to stand out in the exchange track, brand investment is absolutely essential because user trust is directly proportional to brand awareness. DeFi, that's decentralized finance. It means you don't need any third-party permission, audit, or qualification. As long as you have digital assets, you can trade. This is one of the most precious design philosophies in the crypto world. But it's also a double-edged sword. On March 12th, a transaction provided the most extreme answer. There was a user who didn't understand DeFi or what the pop-up warnings actually meant, and even less about what the currencies being traded in DeFi actually were. He invested $50 million and ended up with $36,000. This wasn't a hack, it wasn't a protocol vulnerability, and it wasn't a bug. This incident has caused everyone to start reflecting. When DeFi users don't understand code, or even what a pop-up means, especially with large sums involved, shouldn't there be an extra, smarter layer of protection?
Recently, a user swapped about $50,430,000 of AETH USDT for AETH AAVE via the CowSwap router on Aave's front end. Due to extremely low liquidity, the price impact reached 99.9%. The system warned and required confirmation of a potential 100% loss. The user confirmed the trade on mobile. Routed through Uniswap version 3 and SushiSwap, they received only 327 ETH AVE, worth about $36,425, with a gas fee of $110,368.
If there is like a one bottleneck challenge in the experience, they will just drop out and they won't engage with the product, and that's the learning we have here.
I think a lot of UI UX needs to be improved still to get a lot more,
of course,
people into the space.
Aave founder Stani Kulachov stated the protocol was unaffected. CowSwap is a third-party front-end service. Without user confirmation of risk, trades cannot execute. Aave launched Aave Shield to automatically block price impacts exceeding 25%. CowSwap stated the order followed parameters and warnings were given. Aave will refund the gas fee, but the user hasn't reached out. Also, on March 10th, a WST ETH Oracle anomaly triggered $27 million in liquidations.
Of course, from my personal perspective, the system's warning was impeccable. It flagged a 99% impact that could lead to a 100% loss of principal, and it had a confirmation box. From a protocol standpoint, this transaction was fully compliant, but that's exactly what permissionless means. The system won't make judgments for you. Now that Aave is launching a shield feature, it shows the team realizes this legal but lethal operational path exists. What is this, essentially? It's a flaw in product design. Everyone is admitting that the product has its failures. So the underlying logic of this story isn't about who's right or wrong. It's about the next stage of Web3, finding a smarter balance between the philosophy of decentralized permissionless access and protecting average users from catastrophic mistakes. A $50 million price tag has pushed for a more secure DeFi interface. I think that's the most valuable conclusion to this story. All right, that's the report.
Trump revealed the U.S. has started talks with Iran, with expectations of eased Middle East tensions driving oil prices down. Bitcoin broke $74,000 on Monday, Ethereum rose 7.7%, and Dogecoin returned to $0.1 after 2 weeks. Chicago-based institutional crypto trader Block Phils filed for Chapter 11 bankruptcy with assets up to $100 million. With debts up to $500 million and losses of $75 million, they're being sued by clients for misappropriating funds. The money's gone, and no one's taking the blame. Nasdaq joins Kraken to push stock tokenization. NYSE parent company IC announced a strategic partnership with HKEX this week. 126 trillion yuan in traditional stocks are moving to the blockchain. Wall Street has never been this eager to go on-chain. The US SEC and CFTC officially signed a memorandum of understanding to jointly regulate crypto assets, ending years of internal friction over jurisdiction. The question of who regulates the crypto industry finally has a clear answer. Valerie's co-founder says AI autonomous agents on the OLAS protocol are betting 24/7 on markets like Polymarket, offering retail investors 24-hour strategic trading. When people sleep, it doesn't. Can you still sleep soundly?
All right, time for some food for thought. Have you ever been isolated? If you're in crypto or if your values differ from others, isolation happens often. Honestly, I think it's no big deal. What's truly creepy is those who isolate you. They kick you out of their circle, but their eyes never leave you. They watch your every move, interpreting your actions with their own logic, then whisper about you from the shadows. They say you're failing, but secretly they're scouring your social media. They study every word you post, terrified of missing anything they can use against you. Think about it. You're more present in their minds than you are in your own, right? The funniest thing in the world isn't being targeted. It's that those targeting you care more about you than you do. So don't fear isolation. Fear not being worth watching. That's when things truly get boring. Let me ask you, are there people like that around you? Well, that's all for today's show. Here are all of our membership benefits. I hope you'll join us. Let's work hard and get rich together. See you tomorrow.